lot of max here. So when you see it's solid green, what does that mean? What should the price be doing when it's solid green? When it's solid green, what should the price be doing? It should be selling, right? Because the physical will be long. Or will the physical be short? Well, the physical will be short, won't it? Because if it's solid green, they're buying futures. So the physical should be short. So we need to mark that level. So when does it change? Well, it starts to change when we start seeing more reds coming in, right? So we start to see there's some reds come in here, and then there's some reds come in above us here, and then we get more reds at the bottom edge here. So really, it changes at this point, doesn't it? Then it goes back to some greens. The imbalance is balanced at that stage. There is no imbalance. And then, of course, the reds start to dominate again from this point. So we can obviously look at that and say, well, this market should be selling off during this phase. And it sells off beautifully, doesn't it? We can see in the physical commercial positioning, which is the market maker's game, one of the things you'll probably start to notice quite interestingly enough is when they're selling futures and they are short in the physical market, right? Take a look at the signals you get from that information. They're short the future here, aren't they? And they're also short the physical. So in that signal there, there's a very good chance that you're going to make some money on the sell trade. You see that? They're still short the physical during this phase, and there's a lot of other sell triggers there. So you're obviously watching those sell triggers and you're saying to yourself, well, there's two sell triggers there, and we've got a phase of up candles. I think there's probably going to be a big short coming in there. There's still sell side here, but there's obviously just buying futures. And obviously we start seeing some peak buying coming in here, for example, but the candle spins, so that's not right. This should be a 2 sigma candle. It's not a 2 sigma candle, so that's not going to be a trade for me. It's still going to be sell side. We see a red signal there, which is obviously going to be a sell. So you see there's a red signal just there on a blue candle. There's very strong sell side positioning, so that's probably a sell as well. And the same thing happens all the way down. And again, in there, there's another signal just there. And then we start seeing 2 sells, and then 2 sells, and then 2 sells, and then 3 sells. And obviously what's happened during that period, you can see the positioning is now reducing significantly, suggesting that there is now a commercial buyer at the bottom edge. So we can tell a couple of things from this chart almost immediately. I can now use this information to recognize that at this stage here, the balance that came into that area must now have been commercial selling. So I can now highlight that area as a real money paper seller. So we get this commercial sell zone now, clearly marked on the screens right there. And as we reach down into the bottom edge that turns this market red, we now know that there is a commercial buyer at that price. So when we go forward onto the bigger picture charts, we now know there's a commercial buyer resting in those trade areas. All of a sudden, some really, really interesting levels start to appear, don't they? All of a sudden, we can start to recognize the real kind of ideas behind commercial positioning. We can start recognizing, for example, what we call the manipulation phase. This is obviously the manipulation phase here. When you see a blue candle going down, and then it gets taken out on the way up, that's a manipulation candle, correct? That's what we call a manipulation candle right there. Do you agree? So when the market goes bid up here, you're now looking at that saying, well, we've got a commercial buyer here. We've now got the manipulation price. We've got a very high probability buy reversal coming away from that trade there, haven't we? And obviously, if we were to draw this as a 56 imbalance, we can all agree that there is a 56 in exactly the same place right there, isn't it? That's a 56 imbalance, and that's your outcome. We've just went from 77.30 to a high price of 78. That's a nice $700 profit. We'll take that any day of the week, will we not? Sure will. Sure we will. Does that make sense? So obviously we're 10 minutes ahead of the oil, guys. 10 minutes for oil. So we'll get ready for the oil inventory report. We'll obviously look at that liquidity and find the dealer key levels. That's what we do with the oil numbers. You can see the skew is kind of middle pricing. It's not really giving us a clear one side or t'other type narrative at this stage, is it? So without that idea of one side or other, you know, we're kind of a little bit lost in this trade at the moment, trying to figure out, you know, what perhaps that trade's got for us.